So today we are going to be talking specifically about supplementary fees, fees to parents, how you're implementing them, how you're going to be reporting them, and how you can utilize programs like ChildFriendly, who is joining us today to talk about all of the things they can do to support you in your operation. Make sure that you're compliant with all of the new regulations and rules around supplementary fees. I'm Crystal Churcher. I am a childcare operator. I also am the chair for the Association of Childcare Entrepreneurs, both nationally and in Alberta. So very familiar with the new changes that we've seen on April 1st in Alberta, and have been speaking a lot with different operators of different styles of programs to really understand how this is going to work for them and how they're implementing the supplementary fees. As of April 1st, we have a new childcare funding model in Alberta, a flat fee model that is $15 a day, regardless of income. It is not a means tested program. So if you are having full-time care, that works out to be $326.25 a month. Those are parent fees that are paid directly to you as operators from the parents. The rest of the money for your services comes through the Affordability Grant Program. And this money, this flat fee and the Affordability Grant Program are meant to cover your core funding. This is a big shift. This is something that is different than what we have experienced in Alberta prior to this agreement. So supplementary fees are fees that you can charge as a childcare operator that are outside of the core costs. These are fees that you charge directly to parents. So some of the rules around the supplementary parent fees, like I had mentioned, it has to be optional. Families have to have a really clear choice to opt in or out without any impact on the care that their child is receiving. You cannot break the routine of the child. You can't discriminate against families who are choosing to opt out of these services in your center. You are only able to charge certain kinds of programs under this umbrella, which we can go through in the next slide, but there's prohibited charges. You can't charge for extra operating costs. You can't charge equipment fees or things that would be included in the core cost of running your center. So here's the reporting requirements. And this is, I find, where people have very little understanding of the reporting requirements around this new transformation of funding in our childcare centers. So all supplementary fees, again, have to be clearly documented. You're going to have to explain and document the type of fee. So is this something that you're charging for on a monthly basis? Is this something you're charging parents for annually, weekly, daily? How is it structured? This is really important for you to have the proper supports and tools in place to track this information throughout the year. The last thing you want to do is be sitting down to do your year end and realize that you haven't tracked the revenue from these supplementary fees. And now you're going backwards and you're trying to, scramble to get all the information you need to make sure that you can provide this annual reporting in a compliant and regulated way.
I'm just going to quickly show you guys how our platform can help, alleviate the pain of dealing with supplemental fees on a monthly basis. So first, I have opened the ledger of a family on our platform. You can quickly see the balances sitting on the family's account, but let's quickly get down to how we can deal with these supplemental fees. First, I have an auto billing set up for the tuition for the family. In this instance, you can see I have split parents paying the $326.25 that is capped for the parent fees, and then the remainder to the Alberta Affordability Grant. Now, if I want to quickly adjust my recurring billing to capture the supplemental fees, I would scroll down. I can see that I've done a 50-50 split for the parents, but here is where you can change your supplemental parent fees very easily on our platform. All you have to do is click this plus icon here. In your program setup, you'll be able to add any type of supplemental fees, any type of discounts to any of your recurring tuition billing. So it's very simple. All you have to do is select what you have made. So in this case, the popular one being the meal service, I've just simply selected the meal service. I've defaulted an amount already in setup for this meal service. I want to assign it to whoever I would want to assign this meal service fee to. I can also put in the expiration date related to my meal service program as well. That can be captured and tracked. Simply click this save icon. What I'll be able to see now, if I scroll up, this auto billing summary provides a preview of what billing will occur for this family, and you can see that it very easily adds this meal service to the billing. I can then just very quickly generate this billing for this family and see that the meal service has been added quite easily to their invoice for this month. After that, once you have added all the families with the supplemental parent fees, we have a report that you can go to on our platform here, which we built specifically to deal with regulations. Just simply click the region reports, which will be all the Alberta specific reports we have when it comes to dealing with compliance. Click this region report, click this supplemental parent fees report here. You're able to select your own custom reporting period, but we've already defaulted in the reporting periods specific to the Alberta government on our platform. So I'm just going to pick one randomly just for demonstration's sake. Click apply, and you can see this now matches exactly what the government requires when it comes to the supplemental parent fees reporting. I can see the number of supplemental parent fee programs that I have for this specific demo center that I created, and then I can
And we're going to talk about inclusive environments, inclusive play, and the Inclusive Spaces Grant for Alberta, which is set to reopen hopefully tomorrow, but very soon in May. Very grateful today to have Tim here from Park and Play, who's an inclusive play specialist, and going to talk a little bit about what Park and Play can offer, but also just a bit about how important it is to have inclusive spaces in your daycare or childcare setting.
Inclusion, and what does it mean? Accessibility versus inclusion, equitable play, parallel play, all of these things, they are all part of a larger puzzle that do not mean the same thing. And so I know that as childcare operators, you are applying for grants, such as the grant opening up here in the next few weeks. It's just important to understand these terms in order to help you secure that kind of funding. So that's one of the main reasons that I like to have these talks. So when we talk about the terminology, you can have an accessible space that is not inclusive. You cannot have an inclusive space that is not accessible. So accessible just means that we are giving people access to the site. Inclusion means that once they're in that space and they can move around, there are activities for them to do that are similar or equal to all the other activities for any other child to do, regardless of ability. So when we design play spaces, we were trying to design play spaces that are inclusive by dealing with all 5 elements of the whole child. So this is another structure in a childcare facility that I recently took a photo of. We can see the sort of climbing and activities on it, but then we look at something like this. This is a more modern, inclusive play set where we've got lots of sensory play built into it. We still have climbing, we still have sliding, but we have things that encourage manipulation. There's tactile play, there's sensory play, while still having climbing, sliding, social play, all of those things. So you can see how far the structures have come from the older structures in terms of being more inclusive and really encouraging different types of play.
So a little bit of an overview on this grant program. It was open, I believe it was in January of this year for a short time. It's now, like I said, about to reopen, hopefully tomorrow or shortly. It's a provincially funded program for up to $15 million. It is a competitive grant process. So for any of you that applied for the original space creation grant, this is a different structure on how they evaluate your applications and how they allocate the funding. It's also a project-based program, so you will be funded based on the resource package, the capital project, whatever you put forward with your application is how you get funded. It's not funded based on spaces or anything like that. And the purpose of this program really is to provide support to existing childcare centers to make them more inclusive, more accessible, and improve the quality of those spaces for all children. So here's just a little bit about who's eligible and the priorities of the communities for this program. So you do have to be an existing license holder to apply for this program. It's open to nonprofit, private, for-profit, facility-based daycares and preschool programs. It's also open to day home agencies. Unfortunately, not directly to the day home educators to apply for this. It is through the agency. So a little bit of just some tips and kind of tricks to get you through if you are applying for this program. So you do really need to make sure that like any grant program, that your application is directly in line with the objectives of this program, which are around inclusion, around accessibility. You do need to provide very detailed rationale and expected outcomes. So how will these improvements that you're asking for, whether it's like a resource package or a playground through TIM, how is that going to directly relate to supporting one of those communities, at least one of those communities, and what is the projected outcome of the government funding that in your center? And define like how you're going to evaluate these supports that you're putting into your program. How will you know if they're being successful in the future and long-term for the families in your community? Some of the things that we saw as far as applications maybe not being successful in the first round of this program were things that were not directly related to the goals of this program around inclusion. You can do some, repairs, renovations, construction under this program. You can, some people had success putting forward some new flooring, maybe changing some of the layout in their center to make sure that it is more accessible, but this is not the same as a space creation program. Need to be kind of aware, and I'm hoping there might be some changes around this, but as it stands right now, it does not include any GST on these resources, which is a bit of a gap for us. So we have to be mindful of that when you're kind of budgeting for this. It also is paid out for the majority of people. It was paid out in kind of installments. So you would receive 50% of your project when you signed your grant agreement, and the remaining 50% would come after your last reporting. So that can put people in a bit of a situation if you don't have access to that funding or that kind of cash flow to ensure that you can finish the project. So one of the things, with most softwares, but ChildFriendly directly, a feature that they offer is a journal feature, which allows you to make sure that you are making observations. It really streamlines those observations for your staff. We know that any kind of extra admin and paperwork really does take away from the care and, your attention to children. So making it as easy as possible for you and your staff to track those observations. One of the things around a software journal, like you see with ChildFriendly, is it does help you to communicate with parents. It helps you, again, to make sure that you're modifying things to include all children in activities and adjust any kind of programming that you have in your center to really include everyone that's there. I also am here on behalf of ACE, but also on behalf of my own company that I offer grant writing through, and I'm happy to support you in any questions you have or more detailed information on how we can set you up for success if you do want to apply for this program. We will see you guys hopefully in 2 weeks when we discuss audits and financial reporting for childcare, and that one is on May 14th, same time. So thank you so much. I hope everyone has a great rest of your week. Today is all about financial reporting. I know you guys are so excited to go through how we do audits and what's required of us as childcare operators under the Affordability Grant Program in Alberta. And today I am excited to not be the person who has to talk about this. This is definitely not my strong suit. And we have a really lovely and wonderful guest who is going to be able to answer all of your questions, make sure that you understand what the compliance requirements are, and make sure you're not in trouble or in non-compliance with the ministry under your financial reporting. Today, our guest speaker is Irfan, who's here from RMI, Chartered Accountants.
I'm going to kind of cover over a few different topics. I know we don't have a ton of time. Financial reporting requirements. So any of you who've been running centers for a few years now, you'll be very familiar with this, but couple things to note. So taxes are typically due within 3 months of year end. You have to remember, if you're running a bigger center and you end up having profit above $500,000, your actual taxes are due 2 months after year end, but your actual tax filings are due within 6 months of year end. And that's a really important date, because if you don't hit that 6-month deadline, on the 6 month and 1 day, you get hit with an automatic penalty, and that penalty starts at 10% of what you owe. Now, the other big piece on this, I put an annual return here. Now, a lot of people get confused between tax returns and annual returns, or they'll say, oh, I thought my accountant just filed this, and they're thinking it's their annual return. But what your annual return is, it's separate from your tax return, It is actually a filing that's required with the Alberta Registry every year. And the best example is, think about your vehicle. You have to register your car every single year. Well, you got to register your business every single year and say that I'm active in nature. If you don't do this after 2.5 years, your business will dissolve. And if it does dissolve, then all of a sudden you're losing a lot of your legal rights on things and your ability to operate. It is not an expensive thing, but the most important why I always like to bring it up is it tends to be forgotten by a lot of people. And then they get a dissolution certificate and it's like, what happened? I've been filing my taxes. What happened? GST implications. So childcare centers are funny just because they're not allowed to charge GST. And that's what we've started to see from CRA as well. Is I know a lot of people say, hey, let me go register for GST when I'm opening a new center so I can try to claim back my GST on the build out, for example. And CRA's argument on this one is saying you're not providing taxable service, so therefore they're not going to typically allow that rebate to come back. If you try to claim it, it's going to hit an audit, and a lot of times you're going to get a lot of pushback from CRA. Everybody's favorite topic these days, the affordability grant reporting. So I wanted to kind of cover what is required on this end. And there's 3 different types of engagements per se, or requests from the government. So if you're getting under $250,000 of annual grant funding, for the affordability grant specifically, I should say, they only require an attestation. Now, what that means is anybody can send in their financial reports. The business owner can sign off saying, yes, this is true based on my knowledge, and submit it. Best case scenario, no cost. You could do it yourself. Life is good. If you're between 250 and 500,000, you need to do a review engagement. Now, review engagement, I'm going to go into a little bit of details here, but essentially what we're looking for is what you're providing us, does it make sense? So an accountant in this sense is going to do a lot of tools in terms of inquiry and analysis. And what that means is we're going to take, okay, this is the number of students you have. This is how much funding you should get for this type of student. And when we average it out, does it actually make sense and hit the numbers that you're getting? So another big one here we're talking about is budgeting. So when you're launching a new center, for example, or even if it's an existing center, budgeting is a key factor for you. Now you'll see what banks are starting to do because the space is becoming more competitive. More people are jumping into opening centers, things like that. When you're walking into banks, before they weren't as strict on asking for like a financial projection or things like that. We're starting to see more of that now when banks, when you're trying to go get your funding for your space. Just a few more general tips. I've kind of mentioned some of these as we go along, but just to reemphasize, stay on top of your bookkeeping. And it's not only saying, hey, I've reconciled my bank account. When it's childcare centers, the requirement for your bookkeeping is higher than a regular business. And that's the detailed record keeping, especially for the affordability grant funding. Pay attention to deadlines. Don't just rely on your accountant. We try to be on top of things as much as possible and remind you when deadlines are coming. But at the end of the day, it's the owner of the business's responsibility. If you're missing your deadlines, you're going to pay huge tax penalties. If there's any questions, happy to kind of go through any Q&A.
What are some of the biggest like mistakes you're seeing with the financial reporting for the affordability grant? Like when people are coming to you, what is holding them back or getting them in trouble, I guess?
Yeah, the biggest one is the submissions have been done incorrectly. And then from that standpoint, it's missing out on, not missing out, I would say probably overclaiming students that might have been there, because a lot of people say, okay, my year starting in September, I take the time and effort to do the ones in September. And then come October, I spend a bit less time on it. November, I spend a little less time on it. But throughout the year, you're going to have changes in your students. And so what we've seen a couple times is people have accidentally claimed a student, even though they've been gone for an extended period. And by the time we catch this error, it's after the fact. And now once it gets reported to the government, you're getting clawbacks of big dollars. And those clawbacks, like I said, what they're doing is they're coming in and they're just taking the money right away off of your next draw, or just stopping your funding until it's repaid. So I know a lot of people are relying on this funding for operational needs. And if all of a sudden it disappears for 2 months, like you can get in trouble really quickly. So, and the other big one I think is they're starting now to push back on people. I know a lot of people have just, hey, I've come in and I've just signed the report, even though you need a review engagement, and they haven't actually done it. And they're like, yeah, I've got away with it for the last few years. I'm going to keep doing it. We're starting to see that change.
When you were talking, I know this is something in the beginning we used to always have people ask in our meetings. When you talk about keeping things in separate accounts, like you were talking about, subsidy, parent fees, affordability grant, all being kind of in different accounts. You don't need a separate bank account for those. You could use like QuickBooks or something. Is that right?
Correct.
Like,
yeah, exactly. You don't need to have separate bank accounts for it. But on your bookkeeping is where you want to track it separately.
Yeah. So, I mean, we can just touch a little bit on using some of the software. Like you mentioned, QuickBooks is really easy, and I know it's super easy to link your bank accounts, credit cards too, just so that it's always kind of, you're never falling behind. Definitely really important to make sure, however you're doing attendance, whether you're using something like ChildFriendly or another software, that you have it accurately reported. Wayne is here from ChildFriendly to answer any questions if people want to ask about the software and what it can do to make sure that you're staying compliant.
Maybe just to take a bit on what Irfan was saying. When it comes to being easy to export stuff out of our platform, pretty much almost everything on our platform, even though we fully digitize all operations for the daycares, we do make it easy so that you can export everything out in Excel, CSV, so that it's easy for you to, do any sort of analysis, any sort of reporting you require. When it comes to the attendance records, we might be one of the only platforms that allows you to track your staff by their different tasks, which is very helpful for your wage top. And we also do have sync to QuickBooks as well. And if you do need any help with QuickBooks as well, I can also be a contact if you guys just need any sort of support with regard to using QuickBooks as well. I'd be fine to help out with that.
So we'll let you guys get back to your day. Hopefully you got to eat some lunch with us while we were discussing all of this exciting stuff around finance and audits and your reporting requirements.